Bitcoin is back under 60,000 US dollars and it continues to fall, bringing a lot of the crypto market with it. In today's video, I'm going to explain why you as a long-term investor in any crypto should simply not care about a crypto crash. Let's get into it. How's it going, guys? Brian here and welcome back to another crypto video. And before I get into things today, I want to preface this video by saying I've been a crypto investor since 2017. I've been involved in the stock market along the way as well, quite heavily. So I think at least I've got a bit of pedigree in the crypto space when it comes to understanding market trends, the fluctuations that occur across the entire market and with individual coins as well. Plus, having experienced all these situations and held throughout these entire periods, I know firsthand what the outcome is going to be of a crypto crash over a long period of time. And quite simply, that is going to be something that if you're a long-term investor is nothing to worry about. A crypto crash is going to result in, once again, another bounce. And I'm going to be sharing with you today the reasons why I believe this is going to be the case, or in fact, I know this is going to be the case, and I'm going to show you proof in the pudding. And as a person who loves to get involved with technical analysis, as well as the fundamental analysis, more importantly, this is something which becomes quite clear over time when you're investing in the crypto space. These fluctuations or crashes or whatever you want to call them occur on a very regular basis, and whilst yes, they may look significant at the time, when you then reflect back onto them in the past, you can quite simply see they are absolutely nothing to worry about. Before I go any further, please remember to like and subscribe if you haven't done so already, and I'd love to know your thoughts at the end of today's video on the overall state of the market. Where do you think it's going and why? Let me know down in the comments section below. But now we're going to get into the actual nitty gritty, and first and foremost I want to take a look at the technical analysis side of things, and instead of performing technical analysis in order to make the predictions that I normally do, I'm instead going to reflect back on history. And we're going to start this off by looking at Bitcoin's price history. As you can see right now, Bitcoin has dropped below 60,000 US dollars, and now it's sitting roughly at 59,000 US dollars. And this means people are starting to panic, and many altcoins are also starting to drop with Bitcoin, as we have seen in the past. Now, keep in mind, we have just hit all-time highs of 69,182 US dollars per Bitcoin, and that was quite literally just only a week ago. And in that point in time, the market was absolutely ecstatic. But what I really want to show you is the history. And the history is where we get to see all these sort of things come to fruition, come and go, and we can reflect on potentially what is exactly going on right now. So, you know what? More recent history. Let's start off with that. You can see that back on the 7th of September, Bitcoin dropped from a high on that day of $52,949 to a low of $42,622. That led to quite a lot of panic. Many people sold, and you can see based on the volume of that day, there was a certain level of panic selling occurring, and the market did dip for an extended period of time. But it was only quite literally a month later, almost to the day, that we saw this previous high at this point in time beaten. That is how quickly things turned around. And we're talking a drop from, that 52,949 mark all the way to the very low of this period, right here, 39,500, and then bouncing back above that literally half a month later after that point. Quick, unbelievably quick, and it's one of the hesitations people have with investing in crypto. But the key here is to remember this is a regular occurrence, and whether it's a big dip like we saw over here in April at the start of this year through May, and then continued dipping down until we started coming out of it on the 21st of July, and that was huge. We've seen massive drops, but we come out of it. Once again, we've come out of this period, and after a big run, we need to consolidate. That happens every single time. Happens with crypto, happens with stocks, happens with any market at all. They can't keep running consistently. There will be pullback. But the key here is to basically take a look at history. So, as we can see, in the past, in the peak, or the last pinnacle of crypto, where we saw our previous all-time high on the 14th of April, we hit $64,990. But what happened to get to that point? Well, along the way, you saw a series of dips, consistent dips as well, and people panicked every single time. And I can guarantee if you go back through social media, you go back through news outlets, anything like that, you will see the second there was a red candle that was more than a couple of percent, people started panicking. The FUDs started to come out, and this has always occurred. But let's keep going back into the past. And what you'll notice is a common theme starts to arrive. Now, obviously we're dealing with smaller numbers now, but what do we have here? Well, let's have a look at this. This was on the 12th of March. And it's a pretty unbelievable candle to see. On the 12th of March, we had a high of 7,969 and a low of 4,418. Almost dropped 50% in a single day. And in fact, over the past few weeks, it had basically halved. It had dropped 100% almost. Unbelievable. But what happened? It recovered. And we've seen this time and time again. Once again, we saw this previous high back in 2019. Everyone was saying, yes, this is the most amazing thing in the world. We almost hit 14,000 US dollars per Bitcoin. Then we crashed and kept crashing and crashing and back under that 5,000 mark. And look where we are now. This is something that happens consistently throughout the crypto world. And more importantly, this is something that not only happens to Bitcoin, it will happen to absolutely any other crypto as well. In fact, let's have a look at another one. Let's have a look at Ethereum. Let's grab this one, click there. This is the Ethereum chart. Sorry guys, there's a bit of analysis from one of my previous videos here, but you get the concept. You know, we've hit the highs, we've had the dips, and this consistently occurred all the way along. Constantly happening. We have dips, we have peaks, all this sort of stuff. It continues. It follows the exact same patterns, guys. But the important thing to note is it always recovers, and it will always continue to recover. As you look at the stock market as well, you'll see a very similar theme happening. But you know how I'm saying it's a blip. Look, when we just look at this bit of price action, it looks like there's so much going on, there's so much activity, volatility, that sort of thing. We're back in, you know, the $200, $300 mark for Ethereum here. Zoom out. It's nothing compared to what we're seeing now. Absolutely nothing. Like, it is honestly not even a blip. You would not even notice it if you're looking at a chart from an overall perspective. These big dips that we're having now, these big peaks, they will too one day also be the same. You won't notice them on a long-term chart because overall the market is going to continue to climb. Now, if I was purely looking at the technical analysis there, I'd quite simply say, well, there's no need to panic. But if I'm trading or doing swing trades or intraday trades and that sort of thing, obviously you're going to be wanting to go in and out based on the fluctuations. But I know most of the people on this channel are long-term investors in whatever coin they hold. And the same premise applies to every single one of them. Yes, we're going to have insane bull runs, but we're also going to have market crashes. The key to here to remember is this is not something that is going to last. Yes, there might be a bit of pain, but quite simply switch off your phone, switch off your app. You are not going to be going through this crash period for an extended period of time. And even if you do, it's going to recover. It's quite simple. But the fundamental factor here is invest in cryptos which have utility and the fundamentals to back them. That is why I want to touch on this subject as well. You need to invest in cryptos which have good backing, good utility, good developers and a bit of pedigree behind them to make sure that you don't lose all your money. The only cryptos which will completely fail are the ones which are quite simply scam coins. And if they're obvious scams or just, pumps and dumps, that sort of thing, all of these coins will fail during a market crash. So now is the time, if you are holding one of these sort of coins, trying to get rich quick, get out. Get into the coins instead that are going to have longevity and are going to still be around after the market crash has quite simply finished. And it's funny, I'm saying the market's crashing now. Bitcoin's only dropped from 68,000 US dollars down to 60,000 US dollars. Honestly, that's not much of a crash. It's less than 10%, or actually probably a bit more than 10%. It's a bit more than 10% of a drop over a period of about a week or so. As we saw in the past, we could see 50% to 100% drops back in the day on Bitcoin alone. And where are we now? Multiples of that point, absolute multiples. So the key here to remember is invest long term and invest in those cryptos which have the utility and have the fundamentals to back them. I wanted to make this video more as a gentle reminder for those people who are listening to the FUD, who are listening to all the scaremongering that happens on social media, in news and media outlets. Ignore it. Simply ignore it. Stick to your investment strategy. Why did you invest in the coin that you're in? How long are you willing to hold it? Quite simply, a few days of pain or weeks or potentially months of pain. It's not worth selling it now and then potentially losing out on absolutely insane gains in the long term. The key here is for being in the crypto market for an extended period of time rather than trying to time it. So if I was one of you guys, and this is something that I personally do, I like to accumulate over time. I like to just consistently keep buying cryptos that I believe in over an extended period of time and just keep watching them grow. Yes, there's going to be periods where I put in, $500, $1,000, whatever it may be, and the next day it could potentially be 50% down. It has happened. We have seen it happen in the past, but the whole point here is to try and accumulate as much as possible, and rather than timing the market, just make sure you're in it for the long term and you don't panic sell your very precious coins. That wraps up today's video, guys. I'd love to know your thoughts on a crypto market crash and the overall state of the market down in the comments section below. What is your current strategy? Are you one of those people who are swing trading, or are you holding and in it for the long term? I'd love to know down below. But of course, if you did enjoy today's video, remember to leave a like and subscribe and turn on those bell notifications for more of this sort of content. We cover crypto, stocks, investing and wealth management. But I'm going to leave it there for today, guys. I hope you have an awesome day. I'll see you next time. Cheers.